Is this the rally that will make us millionaires? Welcome back to the channel, everyone. It's Sunday, November 9th, 2025, and that means it's time for our monthly update. We're going to dive into how our QQQ and QLD investments have performed and take a closer look at what's been happening in the markets. Since April 9th, 2025, we've witnessed a historic market comeback. Over the past 7 months, QQQ has been on a bullish run, rising from $402 on April 7th, 2025, to $612 today, November 9th, 2025. It even tagged $637 on October 29th, 2025, before pulling back to the SMA 50 purple line on November 7th, 2025. For the past 6 months, QQQ has stayed above the SMA 50 purple line most of the time. It has only touched this key support level twice since May 1st, 2025, first on September 2nd and second on November 7th. Both times, QQQ was able to rebound. I was able to buy both QQQ and QLD on that September 2nd dip, and I hope some of you were able to as well. After forming the Golden Cross on June 23, 2025, QQQ has reached multiple all-time highs. Now, let's add the SMA 20 black line for a better picture. The SMA 20 indicates short-term momentum, while the SMA 50 shows the intermediate-term trend. Since April 23, 2025, QQQ slipped below the faster SMA 20 black line 5 times, on August 1st, August 20th, September 2nd, October 10th, and November 7th. Crucially, on only 2 of those occasions, September 2nd and November 7th, did it fall all the way to the SMA 50 purple line, and it bounced from there. This behavior indicates QQQ maintains strong bullish momentum. We should monitor whether QQQ can stay above the SMA 50 and reclaim the SMA 20. If it falls below the SMA 50, I believe it will bounce from at least the SMA 200 green line. When QQQ approaches the SMA 50 or SMA 200, these present excellent buying opportunities for QQQ, QLD, and TQQQ. So, let's review why QQQ dipped. According to a recent article, stocks closed the week mixed. The Nasdaq slipped slightly, weighed down by losses in AI-related stocks like Oracle, AMD, and Broadcom, while the S&P 500 and Dow managed modest gains. The ongoing government shutdown continues to impact investor confidence, delaying key economic reports. Consumer confidence has dropped near record lows, and October layoffs reached a 22-year high. Analysts expect a decline of 60,000 jobs and a rise in unemployment to 4.5%, though official data remains unavailable. In other news, Bitcoin dipped below $100,000 again, and concerns over an AI bubble are growing. Moving on to our ETF comparison, QQQ is at $612, which is 13% above the previous all-time high of $540 from February 19, 2025. QLD, the 2x leveraged version, is priced around $141. This is a 17% increase from its peak of $120 in December 2024. TQQQ, the 3x leveraged version, is at $107, representing a 15% increase from its peak of $93 in December 2024. This shows that leveraged ETFs delivered better percentage returns in a rising market. My personal portfolio reflects this. QQQ has a 26% return, QLD has 44%, and TQQQ leads with 73%. Why the difference? You could purchase TQQQ at much cheaper prices during the downturn. For example, on April 7, 2025, TQQQ traded at $35, a 67% discount from today's $107. Meanwhile, QQQ was at $402, only a 35% discount from today's $612, which is much smaller than TQQQ's 62% discount. Now for the QQQ versus QLD $100 challenge portfolio update. For QQQ, we've invested a total of $4,400. Our current unrealized gain is approximately $1,179, a 26% return. Our average cost per share is $482.75. On October 10th, when QQQ dipped, I added 0.167 shares at $595. For QLD, results are even better. We've also invested $4,400. On October 10th, I bought 0.742 shares of QLD at $134. The average cost per share is $97.98. As of now, our unrealized gain is about $1,949, giving us a return of approximately 44%. We will continue to see larger gaps between QLD and QQQ performance in rising markets. These results reflect the leveraged nature of QLD, which is designed to deliver 2 times the daily performance of the Nasdaq 100. While leverage increases volatility, it also provides greater upside potential when markets recover. Since May 2024, we've been investing at least $100 into QQQ and $100 into QLD every single month. This consistent, disciplined approach is called dollar cost averaging, or DCA. The goal is to reduce the impact of short-term market fluctuations by spreading our investments over time. By doing this, we purchase more shares when prices are low and fewer shares when prices are high, all while maintaining a long-term focus. Our approach has just 4 simple rules: invest monthly, hold long-term, never sell, and never use dangerous margin. This strategy is designed to win over the long run and take emotion out of the equation. If you want to see the 30 years of data that proves this works, check out my deep dive videos linked in the description. That wraps up our incredible November 2025 update. The strategy is working, and the results speak for themselves. If you got value from this video, smash that like button, subscribe so you don't miss next month's update, and let me know your thoughts in the comments. As always, this is for entertainment only and not financial advice. Make sure your investments fit your own goals. Thank you for watching. Until then, stay consistent, and let the power of compounding do the work. Happy investing!